Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Winnebago Industries Inc. annual report. Winnebago Industries Inc. offers a diverse range of businesses and services across three primary segments: towable RV, motorhome RV, and marine. The company's product offerings include recreational vehicles, RVs, under the Winnebago and Grand Design brand names specialty commercial vehicles for law enforcement, medical clinics. In mobile offices commercial vehicles, as bare shells for third-party upfitters recreational boats under the Chris-Craft and Barletta brand names, original equipment, manufacturing of parts for other manufacturers, and commercial vehicles. These products are sold primarily through independent dealers in the United States, Canada, and internationally. The decline of Winnebago Industries Inc. stock price by -23.81% over the past year can be attributed to several key factors. The company has faced macroeconomic headwinds, including inflation and higher interest rates, which have weakened consumer sentiment and reduced demand for big-ticket discretionary items like recreational vehicles, RVs, and marine products. The normalization of sales after a post-COVID boom also played a significant role in the decline. Winnebago's revenue began to decrease significantly in fiscal years 2023 and 2024 due to a pull forward of demand during the pandemic. The company's reduced financial outlook and guidance cuts, announced in June 2025, further contributed to the stock price drop. Additionally, soft retail demand across the outdoor recreation sector and downward earnings revisions from analysts also impacted Winnebago's stock performance. Investment firms downgraded the company's stock rating, reflecting concerns about its future performance in a tough market. These factors collectively painted a challenging picture for Winnebago Industries, leading to the substantial drop in its stock price over the past year. The primary drivers of revenue growth or decline in the company's financial performance can be summarized as follows. Revenue growth is primarily driven by the stabilization of consumer demand, return to stable ordering patterns by dealers, and targeted price increases. The introduction of new products such as Grand Design motorhomes and battery solutions has also contributed to revenue growth. In contrast, revenue decline is mainly attributed to lower consumer spending, elevated interest rates, and a shift in product mix toward lower price point models. The motorhome RV segment experienced a net revenue decline due to lower unit volume and higher discounts, while the marine segment saw net revenue growth due to higher unit volume and targeted price increases. The towable RV segment had mixed results, with fifth-wheel revenue decreasing by 6% and travel trailer revenue increasing by 5%. Net income and profit margins experienced significant fluctuations between 2023 and 2025. Initially, net income decreased by $202.9 million from 2023 to 2024 due to a one-time impairment charge of $30.3 million in fiscal 2024. However, it increased by $12.7 million from 2024 to 2025. Profit margins also underwent changes during this period. The gross profit margin decreased from 16.7% in 2023 to 13% in 2025, while the operating income margin dropped from 8.6% in 2023 to 2% in 2025. The primary reasons for these changes include a decrease in demand for products, failure to enhance existing products and develop new ones, overestimation or underestimation of product demand, seasonal fluctuations in sales, and increased competition from competitors' new products. Additionally, higher costs for research and development, advertising, marketing, and promotional programs, as well as excess and obsolete inventory charges, contributed to the decline in profit margins. Overall, the company's net income and profit margins were affected by a combination of internal and external factors, resulting in significant fluctuations between 2023 and 2025. The company is generating a significant amount of positive operating cash flow, with a notable increase from 2023 to 2024. In 2023, the company generated $294.5 million in net cash provided by operating activities, followed by a slight decrease to $143.9 million in 2024. However, in 2025, the company rebounded with an impressive $128.9 million in net cash provided by operating activities. This demonstrates a consistent ability of the company to generate positive operating cash flow over the past 3 years. The company's debt level and interest expenses have undergone significant changes in recent years. While some areas show a decrease, others indicate an increase. Specifically, interest expense, net increased by 22.5% from $21.1 million to $25.9 million on page 32. However, on page 54, interest expenses decreased from $3.4 million to $0.7 million. Regarding debt level, the numbers are inconsistent across pages. On page 51, total debt decreased by $159.3 million from fiscal 2024 to fiscal 2025. Conversely, on page 58, debt level only decreased by $33.7 million over the same period. The varying information makes it challenging to determine a clear trend in the company's debt level or interest expenses. The company's financial performance varied across different segments and regions in the fiscal year 2025. The marine segment continued to perform well, with an operating income of $27.7 million, building on its previous year's success of $52.5 million. However, the towable RV segment experienced a decline, with an operating loss of $7.3 million after achieving an operating income of $103.1 million in 2024. The motorhome RV segment also underperformed, recording an operating loss of $35.9 million in fiscal 2025. These results indicate that the company faces challenges in certain segments and regions, which need to be addressed to improve overall performance. Management is expressing caution about the company's outlook due to various risks such as economic uncertainty, competition, and cyclicality. Despite these challenges, they are focusing on providing proprietary manufactured parts through a dealer network to increase customer satisfaction. To drive growth, the company plans to pursue targeted acquisitions and alliances, expand product offerings, and strengthen customer relations. Financially, management is projecting a 5% increase in net revenues from 2024 to 2025, with sufficient cash on hand, funds generated from operations, and borrowing capacity to meet both short-term and long-term operating requirements. The company has demonstrated its commitment to returning value to shareholders through both dividend payments and share buybacks. In the fiscal year ended August 30, 2025, the company paid out a total of $38.9 million in dividends, with a per-share payout of $0.35 declared on August 14, 2025. Additionally, the company has been actively buying back shares, repurchasing approximately 951,000 shares at a cost of $50 million during fiscal 2025, leaving a remaining authorization of $180 million as of August 30, 2025. Concerns about inventory buildup and supply chain disruption are evident in the company's financial summary. Inventory buildup is a concern due to potential overestimation of demand, credit market volatility, restricting financing, and unanticipated changes in dealer inventory levels. These factors could lead to excess and obsolete inventory charges. Supply chain disruptions are also a concern, driven by tariffs, uncertain trade policies, and loss of key suppliers. The disruption in obtaining motors from Mercury Marine is another specific risk. Furthermore, the decrease in unit deliveries in the motorhome RV segment suggests potential inventory buildup concerns. The overall impact may be both inventory buildup and supply chain disruption, as lower consumer spending and reduced demand for large discretionary products like RVs and marine products could lead to these issues simultaneously. That concludes the financial summary for Winnebago Industries Inc. Feel free to comment below, and I will be happy to answer them when possible.